What's up, guys? Welcome back to Daily Crypto Analysis. What we're going to do tonight is take a look at the derivative of the DXY 20-week moving average and how it relates to Bitcoin. Personally, I think this is one of the absolute best indicators for judging where the markets are and where they're going. And I personally use this indicator. I, look at it all the time when I'm, trying to figure out where I think the markets might be going. So what this is like I said, the derivative of the 20-week moving average of the US dollar currency index. Now, what this does, guys, it tells us whether the 20-week moving average is moving up or moving down and at what rate. And it really puts the data in a perspective that you wouldn't see it in otherwise. So we go to this chart. The blue line is the 20-week moving average for the US dollar currency index. Okay. The orange line is the derivative with respect to time of the 20-week moving average. Okay. So as long as this line is above zero, the orange line is above zero, the DXY is moving up. Okay. Even if you see the line falling, but it's above zero, the blue line is still moving up. Okay. But as it approaches zero, that means the 20-week moving average is leveling off, becoming closer to zero. So think of it as its speed. So as it's going up very high, that means this line is moving up at a very fast rate. Then as it's coming down, it's starting to slow down and level off. When it levels off, it's at zero. Then if it's falling, you can think of it as its speed falling down. So the lower you see this line go, the faster the blue line is falling. Okay, guys? I mean, I'm sure everyone knows this already because everyone was paying attention in calculus. So you guys probably don't need this explanation. But if you do, that's what this is for. So you can see, like we said, here the line is going from, this is right here, the line is going from positive. So you guys see the blue line going up, and our speed, let's call it, think of it as, is 20. So it's going up at a rate of 20. Okay. These numbers don't matter. It just, the zero matters. I've adjusted this line, or I've multiplied it by a number to make, so it doesn't look like 0.0005. Um, the shape of the line doesn't change by multiplying it. The shape of the line stays exactly the same. It's just a way to put it with numbers that are relatable rather than um, you know having point 0 and then 5 zeros. So it's just a way to make it more palatable when you're looking at it. So again, the blue line's going up here, guys, and you see the orange line is above zero, right? As the blue line falls instantaneously, right here, this goes below zero, okay? And then as it levels off, you guys see it leveling off right here, and the orange line is near zero. So it's approaching being still. It's not moving. So, and then as it goes up, as it skyrockets up, this skyrockets up with it, the orange line, because it's moving up very quickly, right? So that's just what we're illustrating here. Okay, so this is just our derivative line now. We're going to get rid of the 20-week moving average. This is the derivative of the 20-week moving average, but we're not going to look at that blue line anymore because this illustrates the data better and it really points out with respect to Bitcoin what's going on. So let's take a look at the 2014 cycle. So the white line is Bitcoin, and we're looking at the Bitcoin price. We're looking at the Bitcoin price with respect to, we're looking at Bitcoin on a logarithmic scale, okay? So as we go up two lines here, Bitcoin is up 10x from 2 lines below. That's how you can think of it. So, right now, we're at around 43,000. So that's why Bitcoin is here just under 100,000, which would be up here. Okay. So this is the 2014 cycle, and you can see DXY. So let's go right around here. DXY was very high and then falling. Okay. As DXY was falling, Bitcoin was able to go on a big run. Okay. You can see we fall below zero. Just as we fall below zero, pay special attention to this area right here as we fall below zero. Bitcoin rockets. It goes, from just over 100 and some, maybe 150, up to over 1,000 in just a few months, right? As DXY is falling. Then, we come to this cycle here. This is the, this is in the aftermath of Bitcoin going on its run. So you can see as DXY bottoms out down here and starts to come up, it hits zero. And notice when DXY bottoms here, this is late 2013, early 2014. DXY bottoms, it stops going down at such a quick rate and starts to come towards zero. And right when it bottoms, do you notice what happens with Bitcoin? Bitcoin hits its peak of its market cycle and begins its descent. So notice here, when DXY hits its fastest rate, so this is when it reaches the peak rate of increasing. When it does that, Bitcoin also hits its market cycle bottom, or right around it. This is actually the market cycle bottom, but this price right where DXY hit its max rate was very, very close to this. Okay, so as DXY is plummeting, Bitcoin, even just after its huge run that it goes on, is able to then, and only then, as DXY goes below zero, Bitcoin, notice here, this is when Bitcoin starts its ascent, right? This is the time in 2015 when Bitcoin goes on its run towards its, 2017 market cycle peak, right as DXY crosses zero. I mean, you can't make this stuff up, guys, how strongly this is correlated. DXY goes below zero and starts to go down. Bitcoin then, and only then, can go up. And you guys might ask, well, why is this? Is this just coincidental? No, it's because when the dollar is strong, people are more likely to hold cash than to be in risk assets. So you'll see risk assets across the board take a hit when DXY is strong. Even the stock market doesn't do as well when DXY is strong. Stock market's able to do, reach its highest levels or move up at its fastest rates when DXY is weaker. So here we go. Let's keep going. So during this time, you'll notice DXY is falling here, right? Bitcoin's increasing. Then it starts to move up, and so here, right when it starts to move up or stop, move towards zero, Bitcoin goes on another little dip. Then DXY hits its peak, right? And starts to plummet again. And, just like we said, and just like we've seen, right when it starts to plummet, Bitcoin rockets, right? Bitcoin thrives off of DXY plummeting. So it's plummeting down. We're below zero. You see right here, we hit below zero. And what happens? We go from 1,000 up to 20,000 in less than a year. Okay, so let's keep going. So here, DXY is now reached its bottom and is coming up. Bitcoin then hits its peak right as just after DXY hits its bottom, and Bitcoin then begins to fall. And you see it's almost, this is the kind of thing you can't see if you're not using the derivative. The derivative points this out perfectly. As the yellow is going up, Bitcoin is going down. The white line is going down. As the white line is going up, the yellow line is going down. But DXY is the controlling factor here. So you might say then, in this instance that I've highlighted here, what's going on? Bitcoin's plummeting, and so is DXY. Well, these events are market-wide events. They hit the stock market, they hit DXY, they hit gold, they hit everything, right? This is the 2018, 2019, basically when the market had a short-term crash. So when that happens, DXY took a hit, Bitcoin took a hit, gold took a hit, all markets took a hit. Same thing, what we're seeing here. DXY is dropping, Bitcoin's dropping, stock market's dropping. This is the COVID capitulation event. So if we keep going, we see here leading up to, the current market cycle after the capitulation in 2018, early 2019, DXY continued to go down, and that's key. DXY continued to go down. In fact, dropped below zero, and there Bitcoin was able to go on a run. Guys, I mean, this is the kind of stuff where you can do this. You can see this data on your own. This isn't hidden data or something difficult to find. But no one in the crypto space, not no one, some people do, but not many people pay attention to this. I mean, there's so much wealth to be made by paying attention to the things that seem boring, the things that aren't exciting. Looking at the dollar currency index, that doesn't seem exciting, but so no one talks about it. So that's why I actually decided to make this channel, because no one is talking about the things that, are actually important. People only want to talk about, hyping up Bitcoin and always talking about, to the moon. But if you dive into the numbers and you get into this type of information, this is stuff that can really tell you where the market's going. So if we just keep going quickly, again, I mean, you guys get the point by now. DXY plummets down, drops below zero, heads down towards its bottom. As it's doing that, Bitcoin goes on its run. As DXY then begins its ascent and reaches positive, that's when Bitcoin, see this entire time right here, guys, Bitcoin only went up from 40,000 to 64,000. It didn't even 2x in this time, in the middle of a bull market, because DXY was showing strength during that time, right? So what happened what happened here? DXY starts going up, Bitcoin crashes, right? I mean, Bitcoin crashed in May. Oh, it's Elon Musk's fault. No, I mean, do you really think Elon Musk crashed the market with a tweet? Do you think Tesla not accepting Bitcoin anymore crashed the market? It didn't, guys. It may have had a small impact, but that's just that's YouTube fodder. This is what's really going on. This is what's really going on right here, guys. And look where we're at now. Look at the day that we started going up again. The day we started the run from 30,000 up to where we're at now. Look at this right here. DXY started going down. I'm telling you guys, pay attention to this stuff. Okay? So you might say then, well, what what predictions can we make about where we're at now and where we might be going? So we're bringing back the actual 20-week moving average. And I want to show you guys, it looks to be like it's in a, a downward descent right now. So it's hit its trough, and maybe it's tough to say, but it may continue up. So we might get a short term, you know, maybe even 6 to 8 months of pressure from the DXY moving up, or it could be in a much larger cycle, which I'll show you guys here in a second. So there's two possibilities at this point. So that's why we need to watch and see what it does right now, because it's at a point of resistance. You see right here, it's been having trouble moving above this level. So this guys here, this is the zoomed out picture of the DXY. And there's actually quite a lot of interesting things going on here, and a lot of actually exciting things if you believe in this indicator as an assessment on, where risk assets will be. So you see DXY, this is now we're looking at the 20-week moving average again. And notice over time, so since basically 1986, DXY is falling, falling, falling. Now we're down here. And this level where we're at now approximates this trend line. It's not exact, so I don't want to tell you, oh, we're precisely at a peak. But something you can notice here, the ratio of this price to this price is about 82% or 0.82. The ratio of the peak we recently hit at 97 approximately. And when I say recently, guys, we're talking in terms of, think much bigger than, months here. We're talking years. So in 2017, we hit the local peak. And that ratio was about 0.85, which is within the margin of error to say that these two events were very similar. So we may have hit our local top and could be descending down towards this trend line now. So if you look at then, the ratio of these bottoms, right? They've been about 91%. So this low is about 91% of this low. If that continued, that would put us at a low of 71.5. Currently, we stand at 93. So then you could say, okay, well, when might we get to that bottom? So these market cycles, these larger super cycles, we'll call them, this one was about 5,810 days. This one was about 5,600 days, approximately. So if that trend were to continue and we said, somewhere, 5,600 days, that would put a low at around sometime in 2027, which is approximately when we would expect a next massive peak for Bitcoin. There's a couple things you can take from this. The first might be that, we may, at least in the short term, not see any sort of, and when I say short term, I'm talking, 3 to 6 months. We could, one of two things could be happening. We could see DXY just go on this precipitous drop, and we could be in a situation where this cycle that for Bitcoin lengthens out to where we're seeing constant increases over the next 4 years. And I wouldn't, I know that sounds, that kind of sounds, very hopeful, But I wouldn't discount that, guys. This is a definite trend. This trend has been going on for decades now. And if DXY continues to fall, Bitcoin is going to, risk assets in general are going to continue to increase in price. Now, this is a very long-term trend you're looking at. So you're not seeing the ups and downs that occur in the midst of this trend. So it's not to say Bitcoin's going to continually increase for the next, 6 years. But what it is to say is that if that does happen, Bitcoin will have, there will be waxing and waning of Bitcoin. But overall, it's going to likely, if that, if this does come to fruition, that we trend downwards, down to this theoretical bottom at around 71.5. Bitcoin will increase in general over that entire range. So, I definitely think, I also think this sort of, goes along with the speculation that we've made that this market cycle top is probably going to happen around 2022, early 2023. I don't believe it's going to happen in, I do not believe 64,000 was the market cycle top. It's not to say it couldn't have been, because, to definitively say that 64,000 was not the market cycle top is just, it's ignoring how markets work. And, it's completely, I just think it's absurd to definitively say that it wasn't. Regardless, based on data, based on what we're seeing, based on what the metrics show us, I believe that DXY has hit its local top and will now descend, which indicates 64,000 wasn't, it was not this market cycle's peak. I think there's a lot of good things in store, and I think this is one of the strongest metrics showing that. So from here, guys, we'll have to see what happens. Keep an eye on this, though. If this starts to, if this does one of these, then Bitcoin's going to be hurting. And, maybe if it does do one of these, we come up to this level and then have to come down. But alternatively, if, as I suspect, we're at our peak and then come down here, this is how we see our $100,000, $200,000, $300,000 Bitcoin. This is the recipe for that, coming down here and hitting this line sometime in 2027. So something to keep an eye on, guys. I think I've illustrated very well how strongly correlated this metric is to Bitcoin. So keep an eye on it, guys. And I appreciate you guys joining me. As usual, if you like this type of content, if you like looking at the markets in a different perspective than perhaps the usual way, hit like, hit subscribe, slap the notification bell. I appreciate you guys. Later.